Thank you for joining us today for our talk on financial investment advice for women investors. I'm Meghna, the community manager here at Her Second Innings. So, Her Second Innings is a platform to help women on a career break return to work. And, we all want to be financially independent, and we know that it is important. And the first step to financial independence is financial awareness. And that can be quite intimidating and confusing to get into, which is why we prepared this session for you in collaboration with Wiki Banking and Credit Council. So I'd just like to tell you about our talented speakers. So we have Mirin Agarwal. She's the founder of FinSafe India Private Limited, which is a financial education company in the space of financial well-being. Mirin has more than 25 years experience in wealth management and has extensive experience in investment advisory, banking, and stock markets. She is regularly interviewed by CNBC TV, ET Now, Z Business, Bloomberg, Quint, etc. And Mirin has also won the CNBC Grand Jury Prize for work done in financial education and inclusion in the UTI CNBC Financial Advisor Awards in 2015 and 17. It's such an honor to have you here with us today, Mirin.
Thank
And we
you.
also have Mona with us, who is the Wiki General Secretary. With, and yeah, so I'll hand it over to you, Mirin and Mona. Go ahead. So happy to have you both here. Mona, Mirin, over to you.
Sorry to keep you waiting. Good morning, everyone. We are here for the banking, for the wellness session on the financial wellness session in collaboration with Wiki and Banking and Credit Council. We have Mirin here with us. Mirin, I'm sorry, can you hear me? I'm sorry, I can't see anybody here. Hi, all. Can you see me or can you hear me?
Yes, we can. Rohini?
Yes, great. We are doing these sessions for all our women employees across. And with that, I would like to call Meghna to share the introduction for Mirin. And with that, we'll start with the session today.
Hi, everyone. Can you hear me? Am I audible? Okay.
Yes, you
Yeah.
are.
Like Rohini said, this is a session for financial investment advice for women investors. I would like to introduce Miran Agarwal. So, Miran is the founder of FinSafe India Private Limited, which is a financial education company in the space of financial well being. Miran has more than 25 years' experience in wealth management and has extensive experience in investment advisory, banking, and stock markets. She is regularly interviewed by CNBC TV, ET Now, Z Business, Bloomberg, Quint, etc. Mirren has won the CNBC Grand Jury Prize for work done towards financial education and inclusion in the UTI CNBC Financial Advisor Awards in 2015 and 17. It's a real honor having you with us today, Mirren. Over to you now.
Meghna, before we start, can we have a quick pause here right now? Can we ask few questions from the audience, and then we'll hand it over to Mirin to share what best that work for our women employees when it comes to investing and savings.
Yeah, sure. We have a space in the comments as well for questions. Um, just a moment.
Sorry to keep you waiting. We are just going to ask few questions from you just to check how do you invest. So we'll just have those questions handy. All right. So while Meghna pulls out the questions, I have Miran, just in the interest of time, and apologies we're taking that long. Uh, just in the interest of time, we have the first question here for you. It's going to be a panel round, everyone. The first question that we want to ask is, what is financial freedom for you? What does that mean to you? And is it really achievable for women? And is this a simple formula for financial fitness? What are the aspects that you see?
Yeah, thank you. Thank you so much. And thank you for having me here. And yes, certainly, I do believe that financial freedom is achievable. And what is financial freedom? It's really not just, being rich or having enough money. It's actually about having enough money so that you can lead your life on your terms. And basically, you can utilize your time the way you want to. So it's basically about having enough for all of your financial needs, but at the same time it's really about also not only for your financial needs but for anything else that you need in your life. And I think it is very achievable. I mean, I myself have achieved financial freedom. A lot of other people whom I know also have done it. There are two ways. I mean, certainly, of course, you need to be earning well. You need to be earning well, and you need to be investing well. So I think it's a combination of both things put together, but it is certainly achievable if you put your mind to it. But always remember, there is a difference between financial independence and economic independence, because economic independence is only about earning an income, right? But financial independence is about having enough.
Very well said, Mirin. With that, I have the next question for you. What are some reasons that women do not get involved in managing their own personal finances? What exactly stops them, or is this the understanding of the financial aspects, or Is there something what you feel? You must have seen meeting people.
Yeah, yeah. And I think, there are multiple reasons. I mean, think about it. How many times is this a topic that's discussed at home, right? Like, forget, I mean, even in your growing up years, right? How many times is this topic discussed with women at home? And, more often than not, I find that women are kept away from such conversations, because it's kind of believed. And I'm not talking about underprivileged, I'm talking about educated women. It's kind of believed that this is something that's better done by men. So I think it is a social structure of the society which has always allocated this responsibility of money management to the men. And that's why women have been kind of kept away from it, whether it is through your growing years or it's even after marriage, right? Like, how many of you, how many people even think that this is something that we should be doing? It's automatically taken for granted that childbearing responsibility or childbearing and rearing, or running the household is something that women need to do, but managing the money is something that men need to do. So I think this is the basic problem that exists, a systemic issue that exists. And second thing, what happens is that because we've never been exposed to it in the past, it is very, we find it very difficult to start taking care of things. Also, women are judged a lot when they make losses. So I have seen so many cases where if a woman just decides and invests somewhere, and if she makes losses, there are 10 people who'll stand and say, I told you so, right? But when a man actually makes losses in investments, nobody is standing there, because half the time the woman doesn't come to know. But nobody's standing there and kind of judging them for it. So what has happened is that you have a combination of lack of knowledge, lack of confidence, and the fact that you're scared to lose money because of the fact that you're just going to be judged about it. And I think these are the three main reasons that women do not look at managing their money. They just prefer to give it away. Of course, the fourth reason being that we have to anyway multitask. There are 100 other things to be taken care of. So if we can give away one thing, why not? But honestly, I would say that in all the things, if you want to give out work to someone else, find something else to give out, because honestly, you need to be in charge of your finances. It's your hard earned money. You should know where it's going and what it's being used for, right? There are incredible number of stories on women suffering because of this. And I don't want to talk about that early in the morning today. But there are also incredible number of stories on how women have used their financial independence for bettering their own lives and bettering the lives of the society as well.
Thank you so much, Brian, for sharing this. While I'll just ask the next question to you, I will request audience, you can put your questions also in the chat. So at the end of the session, we can take those questions if you have any questions from Miran. So, in continuation, Miran, I would like to know, like, how should women start then? These are the three things that you just mentioned. So, how should we start? Simple rules that you think we should follow for investments and for protection of our money or meeting our goals.
I think the first thing is about to say that if I can do everything else in life, I can certainly manage my money. So if you can code, if you can, study medicine and practice medicine, honestly, to me, I think those are much more difficult things to do than actually managing your money, right? And I think the start is really to have that confidence to say that I can do it. The second thing I would say is don't depend on anybody. Our problem is that we'll ask 10 people, right? Oh, should I do this? Should I not do this? And then, it just ends up confusing you at the end of the day, right? So I think, it's about saying, I'm going to just read up about it myself, and I will not, and I will just go and do it. It doesn't matter even if I make a loss, right? We take risk in many other aspects of our life. I mean, if you have any social media app on your phone, that is a bigger risk today than anything else, because all of your data is being tracked, right? That's a bigger risk than actually losing money. We take risks with so many other things in our lives, right? Like, simple thing, traveling in a lift is a risk, right? So I think, first of all, we have to get the mindset right to say that, hey, if we can do everything else, we can do this. it's okay. I can take some losses. I can make mistakes. I'm human after all. So it's okay. I'll learn through my mistakes. So that's point one. Point two is to start reading. Read, right? People spend incredible amount of time when they have to plan a vacation or buy a phone, right? You need to spend that time if you actually want to grow your money. And honestly, the driving force behind all of this is to say that I want to be at a situation where I have enough to lead life on my terms, right? So have that driving force. For that, you will need to read to do things right. There are many financial dailies that are there, and they carry some great columns on personal finance. Take a subscription for one of them. It's not expensive, but it can provide you a lot of insights. um, the third thing I would say is start. Okay. Okay, before that I would say, do not follow influencers. There are a lot of financial influencers now whom people are following. They're all talking a whole, most of the stuff that they're talking is actually just like some quick tips or something like that. Get rich quick sort of stuff doesn't play out. Okay, remember, making money is a long term thing. Nothing can happen in the short term, so don't follow these influencers. And fourth thing is, get your basics right. What do you mean by growing money? Right? What you mean by growing money is that I have 100 rupees today and I want to grow it so that it beats inflation, right? Think about that. I can tell you through my own experience as an advisor and as an educator, people don't think about whether their money is beating inflation or not, right? So I think these are the starting points. Get the drivers in place first, right? And that's a good point to start.
Thanks, Miran. It's quite motivating. You just spoke about like reading. That's like it's very important. And the other thing that you just mentioned, that don't follow the influencers. You need to get the basics right before we get into it. With that, like, what is the right amount that somebody who's new, what is the right amount to start investing? What will you say? I know it's important to take risk, but what should be the right amount?
um well, I think the right amount is, there's nothing known as a right amount. To be honest with you, if difference normally see is that people always think that, oh, I have so less, it's not worth it for me to invest because it's really not going to grow to a very big amount or something like that. But like, the biggest thing is investing is to have the power of time on your side. Okay, so a small amount invested for a long period is much better than a big amount invested for a small period, right? And if you have the power of time on your side, even that small amount can actually grow. Okay. So I would say, even if you can start with 500 rupees, start, invest, and remain invested, right? Always focus on the power of time and the power of compounding.
Before I ask the next question, which was there in the flow, I have a small question out there. Let's say somebody, it's always advisable to start early when you're like in your SIP or FDs or whatever. When you're starting your career, it's always advisable these days, start early at 21, 25, right? But somebody who's at 35 and has not invested much, is this the right time to start, or it's too late? Or
Oh yes, absolutely, and that's what I'm saying, that there is no good time to invest and there is no good age to invest, right? And there's no good amount also. Like, a lot of times people will say that, oh, markets are going to fall, there's recession and all of those things, and I'll wait it out and stuff like that. So this is what I want to say, that it's always a good time to invest. And that means, irrespective of what the markets are at. And even if, okay, so now for a person who's starting late, right? And if you've missed the bus, let's say for 10 years, you need to get some damage control out there, right? So that means that you need to basically ensure that you're investing more, right? Typically what we recommend is that if you're taking home 100 rupees, 40% should get into investments. probably in this case you need to have 50 to 60% trying to get into investments, right? So I think, the idea is that if you've lost out some time, you need to start investing more, and you possibly also need to look at a slightly riskier option to make up for that particular lost time as well. But do not wait, invest.
Thanks, Miran, for sharing that trick to cover up what we have missed. Next question that we have in line is, what are the trending investment habits you see today? Any red flags that we should be aware of? How does one balance investments into financial assets and as well as real assets such as house of taking a home loan?
Okay, so I think some of the trends that we are seeing today. For example, of course, I talked about influencers. The other trend that I see a lot is that we'll always see the recent returns and invest in an instrument. So right now, suddenly, interest in gold has gone up because recent past May gold has done well. And even when we choose any other investments, we are only looking at returns, 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 and nothing else. Actually, the starting point is to first of all say what is the risk in this instrument, right? So a lot of investment people were investing into cryptocurrency because it felt like, okay, this is some sort of an instrument in which I can make money very, very fast. So let me just go and start investing here, right? Or, for example, the reason that people put money in most Ponzi schemes is because they offer a very high rate of return. So, one of them, if you ask me, is the gold jewelry scheme, okay, from the jewelers, right? And I know that the biggest jewelers are offering the scheme, but it's not a regulated scheme, right? So when we are looking at risk in an investment, what is very important is to first of all assess what can go wrong. Okay, so whenever you're looking at a product, any product to invest into, the first question you need to ask yourself is what could go wrong in this particular product? Is it regulated, and regulated by who? So your gold jewelry scheme, for example, from the jeweler, it doesn't matter, it could be the biggest jeweler in India, but the point is it's not a regulated investment, right? And because it's not regulated, you need to stay away for it. Simple. That's point number one. Cryptocurrency, same problem, right? um Point number two, what could go wrong? So right now, for example, I keep getting queries saying that bank is giving 7%, but I'm getting 9.5% in this particular NCD or kuch corporate FD or something like that. What could go wrong there? What could go wrong there is that you are allocating one sum of money to one company, and you have no idea how this company is doing or going to do in the future. So tomorrow, if something goes wrong in that company, all your money is gone, right? So think of all of your Sahara, or whatever in the past, people who have defaulted, right? People went to them only because they were giving a high interest rate, but nobody bothered to check that how is this company doing. Is this a good company to invest into in the first place or not, right? And so because of this habit of only looking at returns, we end up actually taking very, very wrong investment decisions, right? So one thing to always keep in mind, I talked about beating inflation, I talked about compounding. The third thing is very, very important. What is the risk diversification that I'm getting in an investment, right? Today, when you're investing through a mutual fund, right, mutual fund or debt fund would have 10 such companies. So, and there is somebody out there who's assessing the risks and then only investing. A lot of risk we are not able to assess as individuals, right? And that's why you need the help of a money manager to basically assess this particular risk for you. So these are typical red flags that you need to have in terms of how much you need to have between financial assets and physical assets. I would say that there needs to be a good balance. Typically most Indian people have, like, very, very skewed towards real estate, like 70-80% of their wealth is in real estate. Honestly, I'll tell you two things, okay? I think it's a question of what you're more comfortable with. So if you feel, okay, I have experience in real estate and I can manage real estate better, then go for better than equities, then go for that, right? Many times you get this advice saying that please invest into equities and it gives a better return. It certainly does. But I always feel that you should never choose an investment just because it gives a better return, but it keeps you awake at night. So if you're going to be constantly worried about the investment, it's not going to let you sleep, then there's no point in investing into that investment. So first of all, go with what you're comfortable with, but more importantly, keep your returns expectations in check. So gone are the days where you got 20-25 return return in real estate. Your real estate returns are down to about 7 to 8% only. Compared to that, certainly equities is going to give you a better return, but as I said, it's a matter of comfort. uh, the generic advice anyway would be to be well diversified.
Sorry, I was talking on mute. So the next question in line here is, what are the best investments which work for everybody, and how does one choose these investments? Right now, I have a confusion around SIPs and FDs. So, yeah, which
Yeah.
one is the best? Yeah.
So, one thing to always remember: simple, low cost investments which have a very high amount of transparency work the best always. Okay. And you have fixed deposits, simple, no cost, completely transparent, of course. You have PPF, right? Public Provident Fund. You also have a whole host of mutual funds that are available, okay, which are highly, which are highly transparent, highly regulated as well. So, if you were to ask me, I think the instruments that one can look at are the fixed deposits. You can look at PPF, and within the mutual fund space, I would certainly recommend you to look at the equity funds. Now, there are a whole host of equity funds, right? So, how do you decide what to invest into? Because there are so many equity funds that are available. Someone has asked this question that, why is it important to take equity exposure? It's absolutely important. If you remember, I talked about beating inflation. Today, most of the investments do not actually beat inflation. There are very few investments that beat inflation. So, if you really do want to beat inflation, you will need to take some amount of equity exposure. That's the only way that you can actually grow your money well. So there are four investments that I recommend. For your short-term requirements, you can look at fixed deposits. For retirement, and yes, we do need to save for retirement as early as possible. You do have the national pension scheme that's available. To my mind, that's a good disciplined way of investing. For your financial goals, you can look at the variety of equity mutual funds that are available. Within the equity mutual fund space, you have, I'm sure you've heard of this terminology like large, small, mid caps, and all of this could be extremely confusing. I would recommend three funds, right? Three categories of funds, right? One is a plain vanilla Nifty ETF, which basically invests in the index. Okay, so it's known as a Nifty 50 ETF. Second would be a flexi cap fund. A flexi cap fund basically invests in large, small, and medium sized companies. And the fund manager basically buys these companies depending upon their high conviction bets across various sectors. So it gives you a very good amount of diversification. For those who want to take slightly lower risk, who do not want to be 100% in equity, there is a fund known as a balanced advantage fund, which invests both in equities and bonds, right? And it keeps changing the asset allocation or the percentage exposure based on certain market conditions. So these are the three funds that I would recommend everybody to invest into. Honestly, you don't need to go beyond this. There are funds, there are some other good funds categories available, but I would say that if you're a beginner, and if you just want to ensure that, okay, I want to buy something that I can just invest in and I can keep it for the long term, I don't need to keep checking on it. These are your three categories that you need to go to. But it's very important that one, take the equity exposure through these particular funds, because through mutual funds, because you don't have to worry about which sector, which stock to invest. All that is their headache. Secondly, as I said, for retirement, you have PPF, you have NPS as well. And for your short term needs, you can look at fixed deposits. Hey, you're on mute.
Thank you so much. This is really helpful. At least it's going to help me. It gives me a direction. How should I invest? To this same question, is there any ratio that I should follow when I'm investing in Nifty 50 or Flexi funds or balance? Is there a
It
ratio
depends
that you recommend?
based on the risks that you want to take. So, for example, if you have 100 rupees that you've decided to put into equity, and you say, okay, maybe, in the less risky option, which is the balanced advantage fund, I'll put more money. So it just depends upon what is the risk that you want to take, right? There is no, see, personal finance is known as personal finance because it's personal to each person, right? Each person has their own views on what is the sort of risk that they want to take. That's why.
Thank you. The next question that I have here for you is like you mentioned ETF, but typically women are scared of taking equity exposure. Is it really necessary? And you just call that out that
Yeah,
uh,
it is.
it
Yeah.
is
If
important.
you want to beat inflation, you do need to take equity exposure.
Okay, okay. Any trick or any formula that you can give to our people? Like, how can they? It sounds. I can understand what you're talking about, but anything, any formula that you can give through which we can calculate
What?
the
Through which you can.
inflation? Any inflation? Like, how should we calculate the inflation? How much should we invest?
Oh,
Anything?
so, basically the inflation number is put out by the government every year. You can
Okay.
just take a thumb rule of 6%. So basically, any investment that you do on a post-tax basis, it needs to give you more than 6% return.
Okay. Okay. Thank you. The next one that we have for you is like, can anyone identify and manage fund oneself? How important is to take formal financial advice? Is it always advisable? Yeah.
Yeah, I would say it is because, honestly, for most people to figure out there's so many categories, there's so many different funds available. How do you figure out which is the right one to invest into? And that's why you do need some help. Also, let me tell you that, a financial advisor's job is not to only tell you which fund to invest into, but it's really about hand holding you through different times and more importantly, creating a financial plan for you. So, just in any other aspect of life, you have a study plan, for example, right? You have a career growth plan and everything. You also need to have a financial plan. You can't just invest your money in an ad hoc ki, acha aaj ye acha lag raha hai, so I'll just put my money over here today. That doesn't work in the long term. In the long term, what really works is, what are my financial goals, am I, and then planning your investments as per your financial goals. And this is what the financial advisor can actually help you in, to create a financial plan, a journey for you, tell you what are the good options to use for this journey, and then handhold you through that journey. So I think it's very, very important to have a financial advisor.
Thank you. And this tells me that I should, like, all of us should have a goal in place when we are actually
Yeah.
investing that help us meet the target, what we are actually trying to achieve. Yes. A lot of time it happens, we are just investing. We don't have the goal in mind. So thanks. The next question that I have for you here is like, can anyone, insurance and gold investment, how to approach that one? Asset allocation or financial plan?
Um, Asset allocation is a based is a part of your financial plan, because what is the financial plan? It's got to list down all of your financial goals, and then when you invest, for those financial goals, you'll get your asset allocation, ki how much you're going to put in debt and how much you're going to put in equity. That is what is asset allocation, right? How much you're going to put in which asset class: debt, equity, gold, real estate. So once you do a financial plan, which is going to tell you, which is going to tell you, what are your goals and where do you need to invest, you'll figure out what is your asset allocation, right? Now, insurance and gold, very, very interesting question, because these are the traditional investments that women have always gone to. because these are considered like safe investments, right? The problem is something that's considered safe also doesn't give you great returns, right? So let's talk about gold first, right? While gold has actually done very well in India and it's not a bad investment to look at, so the average return from gold has been 8% plus, so it's not a bad investment. It's still lower than equities. The problem is in the way that we are buying it, right? Buying it as jewelry is the worst form of buying gold because you're losing 30% as overhead charges. So whatever you get billed for, right? Whatever 100, let's say you're paying 100 rupees in a jewelry shop, 30 rupees is actually overhead charges, right? And that's a very high cost to pay. I mean, where do you pay 30% as a cost, right? A better way to buy it is through the sovereign gold bond or through a gold ETF. If you don't want any lock in, if you want to be able to enter and exit easily, then obviously the gold ETF is a better way, right? I know a lot of times gold has been bought as this security that's available for the woman. You can get the same security with a gold ETF. It's just that we, because physical gold is tangible in nature, we feel ki घर में रख सकते हैं हम. So you just feel that this is a more secure thing, but honestly gold ETF is cheaper, and it's as secure and it's as easily accessible whenever you need it in an emergency, right? So I think yes, you can have allocation to gold, but not in the form of jewelry. And of course, all of these gold jeweler schemes, as I mentioned, is a complete no. The second thing on insurance, again, this is a product over the decades and decades and decades, people have been buying this product in India. But again, the problem with um, insurance plans, so endowment, ULIP, money back, whole life, child plan, vagara vagara, right? The problem with all of these plans is that the returns are very low. You will be surprised to know that the return from investment linked insurance plans is anywhere in the range of 3 to 5% per annum. Yes, 3 to 5% per annum. It doesn't mean that your income is growing, it's in fact degrowing, right? So you're working really hard to earn money. What's the point of investing it into an instrument that's not going to grow the money but actually reduce the amount that you originally had, right? That's reason enough to stay away from it.
To this point, and thank you for sharing, differentiate, helping us like what's better, whether it's insurance or gold. My question to here is like the market is, I can see the gold prices are rising now. Is it the best time to invest in the ETF, the gold ETF, or people should wait a little more so the price come down and then they start investing? As in, let's say
Again,
late comers.
it's so difficult to predict. If I knew what is the price of gold, then I would be out there trading gold right now instead of being here, right? So
Yeah.
with any instrument, whether it is equities or it is gold, it's very difficult to time markets. It's very difficult to say that it's going to fall or it's going to rise. And that is why what you need to have on your side is the power of time, right? To say that, okay, I'm entering at this point, but I have a 5 year time frame. So over a 5 year time frame, think the volatility should get evened out, right? And that is how you need to approach the investment. Certainly, if you're planning to buy it from a 1 year perspective, you need to be see any investment that you buy from a 1 year perspective, any long term investment that you buy for a 1 or 2 year perspective. First of all, it's not recommended. Secondly, if you're buying it, then you need to be ready that it could be volatile. It could even give you negative returns. It's not like gold hasn't given you negative returns in short term periods, right? So, it- what you have, you cannot control the way the markets move. What you can control is how much you invest, where, and more importantly, for how long.
Thank you. Thanks for clarifying that to us. The next one is slightly personal to you. That is like any two mistakes from your early days on your investing journey that you can share it for our audience.
I think the first mistake that I made was I did not increase the amount that I was investing with the increase in my income, right? So many times what happens is that we set up a SIP and we just let that continue. We don't think, "Ki, let's increase the amount." So whenever you have an increase in income, you have to increase the amount that you're investing, right? That's going to give you a compounded multiplier effect on your compounding as well. That was mistake number one. Mistake number two, which I made in 2006, were trending investments. So, at that point in time, there were a lot of small cap stocks, actually micro cap stocks that were trending, and I invested a whole lot of money there, and I lost it all. Like literally, I lost it all. Those companies are not traded and stuff like that. So that was like a very big real life experience for me. That you know, and you know what? The funniest thing was that somebody had put out a report on some of these stocks, and that's what I realized, that finally, it's just better to stick to tried and tested, and at the same time, uh, pedigreed or experienced players, rather than going in for all of this new stuff. And when I look at what happened in the entire crypto space, right, this is what has really played out, right? Untested investment did really well for a short period of time, everybody got into it, then suddenly you saw a really big crash. And it's the same thing with the IPOs that we saw as well, right? That companies who are not making profits IPOing, and suddenly falling like 50-70%, right? So you'd rather just stick to tried and tested, easier ways to invest, where there is a lot of transparency, there's experience, and there is some bit of accountability as well. Like today, when you're investing in a mutual fund, there is accountability to some extent, that they will invest your money in the best way possible.
Thank you. Simran, thanks for such a insightful session and answering all the questions for us that we have planned. I'm slightly, I just want to, like, the budget is just out 2 days back. What's your take on that? How is it for women, and is it good or bad? Yeah.
Okay, so there are two things. One is on the income, personal taxes, of course. So there's an old tax regime and there's a new tax regime. The difference being that in the old tax regime, you have a lot of deductions available, like ATC, ATD, Section 24. In the new tax regime, you do not have any deductions that are available, right? But you have a lower rate of taxation. Okay, so what is very important is for you to basically calculate as to which is the it's very important for you to basically calculate as to which is the one that works out for you better. Okay, you might find some calculator online, or you might take the help of a CA, but take a decision based on the sort of deductions that you are availing. If your deductions are high, the old tax regime still actually works out better than the new one, right? So that's point number one. Point number two is on the new scheme that has been announced for women. It's a 2-year deposit. Maximum you can invest 2 lakhs for 2 years, and the interest rate is 7.5%, and it's taxable. Uh, for those who are in 10 and 20% tax bracket, you can look at it for a short term. But for those in the higher tax bracket, the scheme doesn't make sense at all. So these are the two things I'd like to say.
Thank you, Mirin. And thank you for decoding the budget for 2023 for us. I would like to check with Meghna. Are there any audience question that we have?
Yeah, it does look like we have a few questions from the audience. So this is from Gayatri. She's asking, how should we start investing amount for kids' education after retirement?
How should we start investing for kids' education after your retirement? Oh, after you invest, after you've retired, you're saying. So you want to invest for education and retirement, or you want to start investing after retirement? Can you just clarify that?
It's actually both. She meant as in for kids' education as well as parallelly, how can she plan her retirement as well?
Yeah. So the first thing is that you'll have to use a calculator. There are a lot of online calculators that are available. You can just write there's one on the FinSafe website also that you can look at for for figuring out how much to invest for all of these financial goals, right? That's the first point, that the amount you need to know, first of all, how much you need to invest for these particular goals, right? Second thing is in terms of, what are the product choices that are available. Again, for retirement, as I mentioned, you have NPS, you have equities, you have PPF as well, and you choose based upon, what is the sort of risk that you want to take in these investments. Certainly, equities is going to give you a good return. So if you have a long period that for to go for retirement, would suggest that you look at the equity options. As far as children's education is concerned, it's completely dependent upon what is the time period that you have. So, if you have more than 7, 8 years for this particular goal, you can look at equity. But if you're looking at only 4, 5 years, you'll have to look at balance funds. And if your period is only 2 to 3 years, you'll have to look at maybe fixed deposits and stuff like that. So, it's completely dependent upon what is the time period for your particular goal that you have in mind.
Thank you for sharing that. Meghna, can we see more questions
Yeah,
if it's
we
there?
do have a few other questions. Um, Please suggest how can someone who has just started earning start their planning?
I think I talked about that. I'd picked it up at that time itself to say that start investing right away, and start investing right away and take some risk. Don't go in for the same old, like your parents might tell you, okay, go and buy a policy or something like that, but don't go in for all of that. Just start. If you don't have any experience in equities, a good way to start is by using an ETF.
And we do have another question about investment itself. So, what is the right amount for someone, and how does one figure out where to invest?
Yeah. So again, based upon your financial goals and your time period to investment is what you need to do.
Thank you. Thanks, Miran. You have shared it like there's no right amount as well. So
Yeah.
thanks for sharing those. With that, we come to an end to this session, to this conversation today. Miran, personally, I really feel enlightened with all the information that you have provided. So thank you so much for this interactive and engaging session. Meghna, thanks for her second innings for conducting this session for each one of us.
Thank you.
So thank you, everyone.
Yeah,
Mona, you're
so
there? Yeah.
hello.
Yes, we can hear somebody's talking.
Yeah, Meghna here. Yeah, so that was a really good session. Thank you so much for your insights and knowledge, Miran. I'm sure our community has really learned a lot. It was very insightful. I definitely learned a lot today as well. And Rohini, thank you for such a great event. This event was a success thanks to you. So yeah, looking forward to working with you again later. Our community has surely benefited from this. Thank you.
And
Thank you.
before we just call off from the session, I would request all of you to please visit FinSafe. It's Miran is the founder for this, so please, if you want to search for the calculators and you need any advice, you can actually reach out here.
Yes, and in fact, on our YouTube page, that's FinSafe India, we have a vlog where I have taken people through the steps of investing. So do check it out. It's a very good learning resource for people who want to start managing their money.
Thank you. Thanks a lot. Thank you, everyone. Thanks for the schedule today.